Post Budget 2021, most of the brokerages have given a big thumbs up as far as Budget 2021 is concerned. They've highlighted various positive aspects of the budget. Morgan Stanley, in fact, has raised their December 2021 BSE Sensex target to 55,000 from 50,000 earlier. They are saying that the budget favored a wider fiscal deficit, and they believe that this view is to spur growth through higher CAPEX. The budget is also looking at a very gradual fiscal consolidation path. Morgan Stanley says that good quality of spending mix and reasonable assumptions as far as fiscal math is concerned. It is very clear, according to Morgan Stanley, that the focus has been on privatization, asset monetization. They also believe that Indian stocks will regain their lost relative ground to other emerging markets. They continue to prefer domestic cyclical sectors, rate sensitives and mid-cap stocks. On the other hand, what does JP Morgan have to say? JP Morgan says that the Union budget surprised with a larger than expected headline forecast deficit. A large part of this was on account of clearance of historical food subsidies. The budget saw increased focus and spending as far as infrastructure is concerned, and due to this, it has prompted them to add to the weightage as far as industrial and cement exposure is concerned in their model portfolio. They believe that going forward, Indian markets and Indian equities will soon begin to track global equity trends. They have maintained their overweight on financials, industrials, as well as materials. On the other hand, what Credit Suisse is saying is that Neelkan Mishra of Credit Suisse says the Union budget says that growth is a very clear priority as far as this government is concerned. They believe that the growth is traction will be provided by the fiscal deficit and by the increased spending that the government is targeting. The pivot to growth in government policy was reaffirmed by the budget. The government is basically relying on boosting investment as well as consumption sentiment in the market is concerned, and what they're saying is that despite sharply higher headline deficits, long-term borrowings rose by just 0.4%. According to Credit Suisse, the budget is positive for SBI, L&T and ITC. Talking about L&T, the clear focus as far as CAPEX, infra projects, multiple metro construction, these are some of the key triggers that will help government spending for L&T, and this will help L&T swell their order book. When it comes to ITC, a lack of a negative has proven to be a positive catalyst. According to ITC, they believe that there are now various triggers that could spur a re-rating as far as ITC is concerned. They believe that the company could actually go in as far as diversifying its portfolio is concerned, could also go in for a reorganization of its assets. On the other hand, they believe that the budget has been slightly negative for life insurance like ICICI Prudential Life, given the fact that ULIPs beyond 2.5 lakhs would be taxed at normal rates similar to that of a mutual fund. They also believe that the yield spike that was seen may continue in